Ladies and gentlemen, welcome back. Today is July 11, 2020, and I'm going to cover silver, gold, and gold miners. I would like to start with the silver. This is a weekly silver spot chart. After hitting nearly $50 per troy ounce back in 2011, silver entered the multi-year bear market. Although gold has broken out from a 7-year resistance back in 2019, silver, being as well an industrial metal, struggled to follow gold. Having advanced as high as $16.71 by August 2019, it was dead stopped at the major resistance and sold off to under $12. And since then, silver wasn't able to break the most recent high. Nevertheless, the number of attempts and hits against the major resistance line becomes more congested. As such, I expect silver to break above legitimately $19 level once gold overcomes $1,800 level with more confidence. Silver miners will start to explode higher as metal overcomes this major hurdle. Immediate target for silver would be $21. Please bear in mind that $2 advance in silver from present levels represents over 10%, meaning that silver miners could rise 20 to 30%. Now let's have a look at gold. This is a 4-hour August gold futures chart. A very exciting week for gold as it made a second attempt to break above $1,800 level, rising as high as $1,829 intra-week. However, eventually gold sold off by giving back most of the advance and closing just above the psychological $1,800 level, adding 0.8% on a weekly basis. Although I like gold's price action very much, some caution has to be kept since 1800 is not just a psychological level but also a major resistance standing from 2011 and 2012. Let's zoom in back into 4-hour chart. Since early June, gold has been trading in a rising channel formation. While two recent attempts above 1800 were cut short and gold didn't manage to test the upper boundary, it literally closed on the lower boundary of the channel, which gives us a hint that sellers still have some dry powder. Even though I cannot rule out completely gold testing the upper boundary of the rising channel over the coming days and weeks at $1,830, $1,850 level, a breakdown of this channel could take gold to as low as $1,765, $1,775. In fact, one more sell-off in gold would have been ideal for the constructive consolidation of gold prior to a start of a next major advance. Finally, moving on to GDX. This is a long-term weekly chart. Although GDX was a bit more bullish than I anticipated, it closed at $38.4, adding over 6% on a weekly basis. GDX met our target earlier than I anticipated. However, gold miners are starting to face long-term resistance at $39.40. That has been formed since 2012. I absolutely welcome any advance above $40 level, yet I believe GDX needs more time to consolidate gains under $40 level over the coming days and weeks. This is it for today. Thank you very much for listening. Please like and subscribe if you found this video useful. Finally, please note that this video is not an investment advice and created solely for educational purposes. Wishing you all a very nice weekend.